Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Communications Construction Company Limited quarterly report. China Communications Construction Company Limited offers a wide range of businesses and services across various sectors. At the core of its operations is infrastructure construction, which includes investment, design, construction, operation and management of ports, roads, bridges, railways, water conservancy, urban rail transit, municipal infrastructures, building construction and environmental protection projects. In addition to construction, the company provides infrastructure design services that encompass consulting and planning, feasibility studies, survey and design, engineering consultancy, project management, and technical research. These services are essential for ensuring that infrastructure projects meet the required standards and specifications. The company also engages in dredging business, which involves infrastructure dredging, maintenance dredging, environmental dredging, reclamation, and watershed management. This service is crucial for maintaining waterways, ports, and other aquatic infrastructure. Furthermore, China Communications Construction Company Limited offers a range of supporting services related to its core businesses, including project supervision, general contracting, and compilation of industry standards and codes. These services demonstrate the company's commitment to providing comprehensive solutions for its clients' needs. Overall, China Communications Construction Company Limited is a diversified business that provides infrastructure construction, design, dredging, and supporting services across various sectors in multiple regions worldwide. China Communications Construction Company Limited market capitalization of $117 billion is significantly larger than the average industry peer of roughly $18 billion. This shows that China Communications Construction Company Limited holds a significant advantage in their industry. China Communications Construction Company Limited trades at a lower price-to-earnings ratio of 3 times and a lower price-to-book ratio of 0.22 times relative within the industry. This makes the stock appear attractively priced. However, the broader industry is also trading at low valuation levels, suggesting sector-wide pessimism rather than the company-specific undervaluation. Further evaluation is required to identify if the company worthy of investment, or could it be an extended period of low valuation or a value trap. The leverage on the balance sheet appears elevated, with liabilities of 75% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 5%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The net income of the company experienced a significant decline, with a decrease of 24.95%, 30.1%, and an alarming 84.1% as reported on pages 3, 18, and 26 respectively. This substantial drop in net income can be attributed to various factors affecting profit margins. One major contributor to the decline in profit margins was the decrease in gross profit margin. Additionally, higher credit and asset impairment reversals in the corresponding period of last year also played a significant role. Furthermore, an increase in investment returns added to the downward trend. However, there were some positive changes as well. The reversal of credit impairment led to an increase in profit margins, with a notable 95.52% reversal reported on page 6. Despite these fluctuations, it is clear that the company's net income and profit margins underwent significant changes. The reasons behind these changes are multifaceted, involving both positive and negative factors. Understanding these dynamics is crucial for making informed decisions about the company's future performance. The company's financial performance has shown significant improvement, as evident from its ability to generate positive operating cash flow. This achievement is a testament to the company's efficient management of its operations and resources. According to the latest figures, the net increase in cash and cash equivalents stands at $37 billion for 2026, indicating a substantial inflow of funds into the business. This positive trend suggests that the company is effectively converting its earnings into operating cash flow, which is a crucial indicator of financial health. The company's debt level and interest expenses have undergone significant changes in recent periods. Short-term borrowings have seen a substantial increase of 36.2% from $106.4 billion to $144.7 billion, indicating a notable rise in the company's short-term liabilities. On the other hand, long-term borrowings have experienced a slight decrease of 0.55%, suggesting that the company has managed to reduce its long-term debt. However, interest expenses have increased significantly across various periods. The finance costs, including interest expenses, have risen by as much as 395.6% in one period and 71.2% in another. This indicates a substantial increase in the company's financial obligations, which may pose a challenge to its profitability and cash flow management. The performance of various segments and regions has been analyzed, revealing notable differences in their growth rates. Overseas operations have shown a significant improvement, with a remarkable growth rate of plus 25.93%. This indicates that the company's international presence is thriving. On the other hand, domestic operations have struggled, experiencing a decline of minus 5.49%. This suggests that the company faces challenges within its home market. Unfortunately, there is no specific information available regarding emerging business markets, making it difficult to assess their performance. The company's financial activities have been documented, revealing some key details. One notable aspect is the payment of dividends by the company. According to the records, the company has indeed paid dividends on 2 separate occasions, as mentioned in pages 22 and 29 of the documentation. This indicates that the company has a history of distributing profits to its shareholders through dividend payments. However, there is no information available regarding share buybacks, leaving this aspect of the company's financial activities unclear. That concludes the financial summary for China Communications Construction Company Limited. Feel free to comment below, and I will be happy to answer them when possible.